presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Tampa. Hey, Al, what's going on?
Oh, it's a beautiful thing. I mean, if your listeners don't get the gold report, they're missing out. I mean, with your gold report, you just printing money. I love it.
You're my best ad out there, Al. Let's go to Jeff in New Jersey. Hey, Jeff, what's going on?
Great. Hey, listen, I was calling to thank you. A few weeks ago, you were prompting on your show to fill out that $10,000 grant.
Yes.
So I filled it out, and just a couple days ago, I found $1,000 in my business checking account.
That's awesome, man. That's awesome. Yeah.
And I owe it to you, because if it wasn't for your prompting, I would have just assumed, no way I would have gotten anything. So I wanted to thank you.
No, we appreciate you growling a problem with us here.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN Monday Trading. We kick things off, and you have the S&P sliding slightly to the red, but we're talking about a price point of 64.12 in the S&Ps, folks. We are a solid 45 points off of the highs, though, 64.57 overnight, and it's been a steady slide to negative prices. The last hour, though, just chopping around. You put this even on a minute, right? In terms of 2 o'clock, just a 5-point trading range since that area. But yes, we got lower prices throughout the trading day. All things considered, S&P above 6,400 though, down by 0.2%. NASDAQ 100 holding on to the green right now, but trading lower as well, off by about 130 points from the overnight high. We're at 23,453, up about 0.1%. The Dow off 0.3%, just under 45,000, 44,938, and the Russell negative by 0.2%. Bitcoin, we were as high as 121,000 Sunday night. We're trading at $119,010 right now. Crude catches a bid. Got a little bit of volatility with Russia, as Trump imposing now a 10 to 12 day peace. We'll see where that goes, but nonetheless, a little bit of risk premium in crude, pushing $67 this morning. We're back at 66.86 right now. We jumped to notes and bonds. And yeah, on the following of the U.S. and the EU with a 15% tariff deal, we have lower price, higher yield, and a stronger dollar so far this morning. You're talking about a 10-year at 4.42. And you have the dollar right now digesting that deal with a little getting over some risk premium, risk, whatever you want to call it. The dollar trading higher by a full point. We're at 97,647 as of Friday, and we're literally almost to the tick. 1 full point higher. We're pushing 99 right now. You take a look at the dollar, that is quite a move. On that dollar, you take a look at where we were in July. Now, what's remarkable about July is all the acceleration higher has been in July, right? July 1st, you were at 96.37. We had the 10-year yield at 4.19%, and you had the dollar crashing lower. So we have yield weakness, you have dollar weakness, right? Since then, we got the 10-year now at 4.42, so we're 23 basis points above where you were, and you have the dollar pushing the highs of about 10, 11 days ago when we got up to a high of 98.95, and we're trading at 98.646. And we kick it off with the dollar for our first headline. The dollar climbs the most since May as trade jitters ease. Yeah. And you take a look, and on top of that, you're talking about $1 right now to get on it. We're talking about the biggest month. Where were we? Forgive me. We up here? I'm jumping around to too many. Since May, no, I want to. There it is. That's the I wanted the chart. Dollar set for the best month in 2025. What I will say, though, is that I knew right when I looked at this, right? I said, man, the dollar's not really up that much. You're digesting. Well, it is if you cherry pick the low, and that's just what happened, all right? So you're going to see that the dollar's set for the best month this year, but that just happens to coincide with the fact that this acceleration higher is off the heels of that July 1st low at 96 and change. We're at 98.64. Folks, 2 days ago, we're at 97.10. okay? 2 days ago, we were basically pushing the lows, and now you get to have headlines that the dollar's having the best month this year. So keep that in context as we go forward, because if we do get cuts, which the pressure is going to be on, whether it's Chairman Powell, okay, now we have a Fed decision this week. It's Fed week, even though there's no expectation for the Fed to do anything. And then, of course, it shifts to September. But there's going to be pressure for the Fed to lower rates. That is going to be pressure for the dollar to the downside. But nonetheless, you're getting a bid today as we get over the EU and the U.S. with a 15% tariff deal. All right, and I mentioned we get Fed Day on Wednesday. We also get some pretty big earnings events. You get Microsoft and Meta on Wednesday. Jump over to Microsoft shares right now. We're at 714. You were as high as 747. In positive by 0.2% today. Yeah, look at that pop on the open, man. I was doing the morning program. Gave it up $10 from the high to the low. We had some selling in this market. Microsoft on Wednesday as well. Same thing. Microsoft, $5 off of where you were. And then you get Apple and Amazon on Thursday. Apple shares down by 0.2%. Amazon getting helped by that trade deal with the EU, up by 0.6% right now at 232.81. And stay tuned, folks. We're coming back with our man Steve Rhodes. We'll be back. Don't go away.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We have the S&Ps negative by 12 points right now. And as you can see, right, even on a 15-minute basis, just a very low volatile hour in the last hour and 15 minutes or so. S&P's pushing 64.10 right now. And we got the NASDAQ 100 in positive territory as, we come into a pretty big week of earnings. Microsoft and Meta Wednesday, Apple, Amazon Thursday. And, of course, we have Fed decision on Wednesday as well. With the press conference, Chairman Powell will air that press conference right here, live on TFNN. Right now, folks, we're going to jump over to our man, Steve Rhodes. And folks, check out Steve's outstanding newsletter, Mastering Probability. You can find that right under the newsletter tab at TFNN.com. You hit that subscribe button, folks. You gain access to his newsletter for $149 for 1 month, $695 for 6 months, or $1195 for the year, saving as much as almost $593. And you get a 30-day money-back guarantee with all of those, folks. Come with, as we always say, talking just some tremendous webinars that you gain access to all of it. Steve Rhodes, good afternoon.
Hey, Tommy, like we talked last week, King is alive and well.
Oof, right?
Yeah. So, just if we take a look at what I've got on my screen right now are the three primary currency pairs that make up the U.S. dollar index, and that's the euro, the yen, and the pound. And the three of them together make up 83% of the weighting. The euro is 57%, and I forget it's like 14, 13%, whatever it might be for the yen and the pound. The pound is getting pounded. And the pound is actually in the process of forming an A to B equals CD pattern to the downside. Now, all three currencies are weaker this morning or this afternoon versus the U.S. dollar. But you can see we're taking out a TD9 count bottom pattern. We're taking out its swing point. This is the pound that we're looking at from July 16th. And then he closed below 133.64, gets us an A to B equals CD pattern to the downside with an initial price projection of 131. If that's going to take place, that's going to continue to keep strength in the dollar. When it comes to the yen here is moving up. It had a TD9 count top. It's trading into that swing point. That was from July 16th. If price closes over that swing point high, that's 149.18, that will trigger an A to B equals CD pattern to the upside. That will most certainly put strength in the U.S. dollar, and it's really going to be all about the euro. So in the case of the euro, I really don't have an A to B equals CD pattern to the downside that it can make. The reason is that its swing point from July 1st, when there was a retracement back into July 24th out there just a couple days ago, was kind of you were referring to and taking a look at the U.S. dollar index. It's just the opposite. It was too much of a retracement in order to be an A to B equals CD pattern to the downside. But nonetheless, if price takes out its TD9 count bottom, and that would be the swing point low from July 17th, we would be looking at a move back to the 114 area. That's its TD9 count breakout level. So, so those are the levels to be watching. It's better, I think, take a look at these three currency pairs to understand exactly what's going on with the U.S. dollar index. So, just wanted to be able to share that with you, since you had covered that. Just
I like it, man, because I look at the DXY, and and thank you for giving those details. For those who don't know, the euro is a huge one, of course, and as you said, the yen out there, and then the pound. And the pound, man, talk about breaking that B point, right? I like it
exactly.
Yeah. And boy,
doing it in a strong way.
Yeah.
That prices along the left side of that diagonal line. So at this moment, that's an even stronger move than the A to B line, which was just a down elevator. It's what it looks like to me. So
I was just going to add, Steve, even on the euro US dollar, it's great. I know that move remarkable when you see the difference, even and quite a recoil, I guess, and then an explosion today. But it wipes it all out today. So that is some serious strength for the dollar, weakness for the euro, as in that move alone. Just my goodness, right on that chart.
Yeah, it definitely, can get worse out there. As far as overnight action, I'll see if something will populate on my chart, and then I'll get back to some of the stuff that I pulled together. I was taking a look at the. I don't think this is going to populate that quickly, but when I was, so I'll just share. I'll just share with folks. Okay, here it actually comes.
Nice.
So the 60-minute time frame chart negated a TD9 count bottom pattern, and it did that just kind of as we were coming on the air at 3 o'clock. And so that suggests that we should see 6402.75 for the ES Mini. If you go over to the very right-hand tab, I've got a 10-minute bottom pattern. But the way that the market is traded, the fact that the daily over here is below that green oscillator and change line, the fact that the 5 hours below profile support, the 4 hours below profile support, the 2 hours below profile, all those are suggesting we should see a further move lower. Now, that would just simply be a 2-day move to the downside, potentially a 2-day move to the downside. But what's nice about that, though, Tommy, is it kind of leads right in to what I wanted to chat about today with you and the listeners out there. And that was first, real quick synopsis. Here's a 97-year seasonal cycle. The red vertical line is where we're at today. Most people are familiar with the sell in May. That's way back here. The sell in May usually bottoms towards the third week in May, and then we rally up. This over 97-year period, typically rally up into the early part of September. So that's one possible analog pattern that we're taking a look at. This is the 97-year seasonal cycle, the same thing that we were looking at, but only for the month of July. You'll see I just have July checked here. Now, the bias is really to the upside for the rest of the month out there. So just share that with folks. We don't know if price is actually following along this analog because there is the 97-year post-election seasonal cycle. This suggests right here that we would have a down day today and that we would rally into the end of the week or beginning of next week. August 2nd is typically when, during the presidential seasonal cycle, over the last 97 years, that means we've got 25 touch points. But really, Tommy, 2025 isn't really, so there's really 24 touch points out here. But that's pretty decent. Now, this is the analog that is following. As you can see, it shows that we should expect and anticipate that we move lower into the October timeframe. Before we do a bit of a rally, and it looks like maybe right around just after Thanksgiving, in the early part of December, we start to move lower. So that's that analog. So how do we know which one, if either of the analogs are in place out here? Well, one of the things we could do is first just start taking a look at the post-election seasonal cycle. Says we should top out late this week, early next week. Well, if we take a look at the S&P 500, again, this snapshot was taken maybe an hour and a half ago. We're in bar number 8 on the S&P Cash. We're in bar number 8 of the ES Mini. We're in bar number 8 of the SPY. All three of those are suggesting that a TD9 count top could take place between today and Wednesday. So that's close enough for me for our average work out there with regard to a potential top. So right now, this leans more towards the presidential cycle out there. The equal-weighted ETF, the RSP, still has a top that's in place out here. So as long as that doesn't get negated, it would be a close above 187.84 out there. So what I then use, if we're going to form a top and if we're going to start moving lower into October, I really move over to the ES Mini versus the S&P 500 or the SPY because their profiles are better. So we'll use profile levels should we get that top to see if it's more than just a 2 or 3 bar move to the downside. Here is coming off the April low. Those blue arrows show you consecutive days to the downside. We've had one 4-day move to the downside. The majority have been 2 days. There was one 3-day move to the downside. So today's number 1 for the S&P to the downside, or the ES Mini. Tomorrow might be number 2, and that in fact could be a bottom. It could just be a 2 to 4 day pullback out there. So we'll pay attention to profile levels. We are trading above profile resistance as we speak right now for the ES Mini. That's at the 62.95 level, and everything looks. It's been very bullish market on a weekly basis, Tommy. We've only had 1 2-week pullback, and it was pretty minimal. That's it.
It's amazing, man. And, folks, check out just great information, Steve, the exact levels, the actionable levels you're talking about. Folks, check out Mastering Probability, and it is remarkable on that weekly, right? What are we up, 30? It was 4,800 to 6,400. I'm ballparking, folks. That's 1,600 points. Okay, which is 1/3 of 4,800. That's 33% that the market is up. My goodness. And Basil, I talked to Basil, of course, on a weekly. How are you going to have peaks when it never goes down, man? Which is just wild.
Exactly.
Steve, great information, man. Folks, check out Mastering Probability. We talk about the webinar. Steve's got updates in the morning, the afternoon. Steve, great stuff. We look forward to the program tomorrow. Have a great night, man.
Thanks, Tom. You too.
Thank you. Folks, check out Mastering Probability. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps down by 10 right now. Great stuff from our man Steve Rhodes as usual. And yeah, folks, check out Steve's outstanding newsletter, Mastering Probability. He puts out updates every day, twice a day. You get a morning update, you get an afternoon end of day update, okay, and then you gain access to the many webinars he has. If you're sitting there watching this program and you said, yeah, I'm thinking about it, but I don't really want to sign up, folks, check it out. You get a 30-day money-back guarantee, and if it's not something you're going to keep, just let us know. You get that refund, and you get all the value of those 30 days. Check it out. And yeah, it does make sense, you know. It's always cool when history repeats itself, right? You can say it doesn't repeat itself, it rhymes. Is that Mark Twain, I think, right? I was just Googling that. But yes, and it does. And it's not because of superstitions, though, folks. I think the coolest part about when Steve goes through those charts is, of course, it makes sense that history rhymes, repeats itself in a cyclical nature as you coincide with things like a presidential election, right? Optimism. Buy the rumor, sell the news. To a certain degree, when Steve shows those charts, there's going to be a massive amount of optimism when you get, most of the time, a new president that's chosen by the people, right? They're the person that the most people chose. Keeping politics outside of that. So it would make sense that people are hopeful that you have a president, especially as they're coming in, new policies, etc. And then what happens, though? You're elected in November. You come into office in January. You pass all the things, you hoorah the whole political policy, first 100 days, whatever you want to call it, and then reality possibly has a chance to catch up, no matter what party, what politics, all it is. So great stuff from Steve as always, and yeah, check out that Euro today, right? As Steve said, not necessarily an A to B, C to D when you come back to this level, But that's quite a move, and you're looking to break through no matter what. It might not be an A to B, C to D, folks, but that looks like you have a weakening euro and a strengthening dollar, and that does not look to be stopping today. Down by 1.3% right now. And yeah, how about the pound? As you break below that level, and always watching the yen. And boy, that would be remarkable. You got about a price tag of 149 to get above those highs. We're at 148.54. And boy, if that's the case, right? So that's how those charts line up. See if the dollar can get above this 99 area. You're at some critical levels, right? And it would make sense. You're at a critical level in the DXY. Of course, you're at a critical level in that euro, the pound, and the yen, which make up, as Steve said, 80% of that. Whew. And right now you got a bounce going. And if you're watching the DXY, 99 is going to be the line in the sand to a certain degree. 100 is going to be a line in the sand always, okay? But 90 is a barrier because you see that's where we came down on April 11th. Remember when we were trading at 104 coming into the tariffs? Okay? April 2nd, Liberation Day, right? 104. 104. You spike down to 99. We get a brief pop. And then the next slide begins when you go from 102 to 96. But you can see that, again, we hit 90. 90 was our initial pop on June 23rd. And 90 was right where we got to in the middle of July as well. 98,664 right now in that dollar. All right. Jump around to some of the other stories out there today. So Warner Brothers, I got a call about this on the afternoon show. I said, yeah, that break, man, that was a good one. Now, we didn't have volume on follow-through, but check this out, right? Warner Brothers breaks above the high of December with volume on the week of July 14th. That was also the high from December 2023. I'm going to back it up even further than that. Okay. Now we're coming into an area of about 14. That was your high in August. And you have 16 out here. I think we're going for 16, man. And yeah, we lightened up on volume slightly last week. But all things considered, you did 457 million shares last week, folks. That blows apart anything we've ever done prior to the week prior. Okay? And so you got the news out there today that Warner Brothers Discovery, they are splitting up the companies, and they're going to be Warner Brothers and Discovery Global are going to be the two. Yeah, they got new leadership. They expect to separate in the middle of next year. It is remarkable how long these types of breakups take. You're talking about 12 full months. And Warner Brothers is going to house its movie properties. You're going to talk about DC Studios, HBO Max, and then you're going to have Discovery Global going with their television channels, entertainment, sports, news, CNN, TNT, US, Discovery, Discovery Plus. Now, what's going to be interesting, okay, is that I'm a Max subscriber. I love Max. They got a great niche. You know, when I say niche, they do have a great niche. I think they wanted to be Max for everybody, right? And they figured out that wasn't going to work. It wasn't. I mean, they had Sesame Street on there. They got everything. No, HBO was driving that thing, man. HBO was driving it. They said, who gave the authority to drop the HBO from that, right? So HBO Max. But I did enjoy TNT. I enjoyed watching the hockey games as part of that streaming service, okay? I enjoyed watching CNN as a live streaming news channel as part of that service. I'm giving you, I always say, anecdotally, listen to yourself a little bit, okay? HBO is very expensive. I love some of their programs. But part of the value that I was experiencing from that bundle, okay, was I was getting live sports on TNT. And as somebody that does not have television, okay, CNN was a very easy way for me to get live news anytime I wanted streaming. Now, I'm sure I can find other avenues. Okay, I got Bloomberg, which is what I have all the time. But yeah, you're going to see a little bit as they separate the two. Nonetheless, those are the two. They're going to be splitting by next year. And yeah, Warner Brothers is having a run right now. And there's nothing on this chart with slowing it down to 16, in my opinion. Maybe you chop around a bit. We are at this level where you sold off in July of 2023. We peaked out in August as well. But look at the way we're coming into this volume-wise, right? You had nothing up there compared to what you're doing right now and the buying that's going on in this equity right now, trading higher. Warner Brothers, 1.5%. Netflix? Yeah, not the case, man. This thing's just dropped $180, $170 from where we were trading at this month. What do you mean down? Oof. Down like, what, 12, 13% right now on Netflix shares. We jump over to Disney. All right, now we get Disney pushing the top of this consolidation area. Let's back it up even more than that. Yeah, this goes all the way back to 2015, folks. It would make sense. It's going to take some work to break through this level. You know, it's crazy, right? You know what we're trading into, folks? You ready for this? You ready? We're trading into August of 10 years ago when this thing collapsed lower. And you're also trading into the bar from COVID, okay? But pretty remarkable that you are into that bar. The high of that bar is 122.08. Nonetheless, we're in the upper boundary, and you got highs from last year at 123.74. Stay tuned, folks. We'll come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Forgive me, folks. Somehow my mic got muted there. All right. We have the VIX right now. A little bit of positive territory right now. We're at 1534. You're up by 41 pennies. All things considered, a relatively low number on that VIX overall, as we have just lower prices across the board, slightly elevated today. But all things considered, no reason why we won't just coast into the close today. The only thing that has my spikes up a little bit is anytime you get this much of selling, okay, for the majority of the day, you better believe it's possible to experience some ratcheted up selling coming at you. Now, tomorrow's going to be an interesting day as investors get positioned ahead of Chairman Powell and Microsoft and Meta, and then Apple and Amazon on Thursday. All right. Jumping around to what else we have going on in this market. So you got Microsoft and Meta on Wednesday. You get Apple and Amazon on Thursday. You also get UNH tomorrow, I believe. UNH up by 0.2%. Folks, if you didn't check out the morning program this morning, okay, head on over to YouTube, subscribe to our YouTube channel, watch the morning program, the Morning Market Kickoff. I spent almost a couple segments just walking through some of the anecdotal. I say anecdotal. This one's not anecdotal. This is great reporting from the Journal going back to July and August of last year, folks, okay, talking about the Medicare fraud that is to the tune of $50 billion over the period of 3 years, 2019, 20, and 21. And what it has to do with is these insurers, okay, sending nurse practitioners for home visits, giving their own customers $50 Walmart gift cards to come diagnose them. Think about how this works. Think about how messed up it is. I'm not going to dig into it, but they're the insurer. They're scheduling appointments people didn't ask for. They're diagnosing them, to get the word, with conditions that they don't even get treatment for in many situations. And I will find that. Well, I'll find some of those and put them in there because they're good. I meant to do it this afternoon. No spin. I will. For the next break, folks, I'm going to put them in the Tiger's Den because there's some good ones, man. I'll see what I can find because they are crazy. I don't understand how it's not even further. But guess what? These stories were coming out last July and August, folks. That's what the stock looked like in July on their earnings. Okay, and that one of the first articles was July 4th. Probably this week when you traded lower. And then the next one was August 4th. When you traded lower a little bit, but guess what? It didn't matter at all. But imagine, the last thing the insurer should be doing, if the relationship was reasonable, the insurer does not want. Now, they're making the case that they provide better health outcomes, right? All this stuff. Insurers don't want to diagnose the people they're insuring with more severe ailments that they're not even going to treat. As in, normally if you diagnose somebody, you're going to have to end up treating them, right? In a normal relationship, that would be like your home insurer, okay, telling you, hey, do you mind if I come out and take a look at your house to see if I have to fix anything? I'll give you $50. Imagine, this is what was going on, which is how crazy. I'll give you $50. The only part is there's a third-party payer, the government. Okay? Because imagine if they did that for your house. They say, you can't see it, but I'm telling you, you got this roof deal going on. I'm going to diagnose your roof with this problem. Okay? And the best part is we get to bill the government for that roof problem and you don't even have it. That's literally what happened with health insurance. The insurers would never send somebody out to go find problems with you that they may need to pay for. Okay? And they're doing it under the guise that it's somehow better for their patients. But meanwhile, they're diagnosing their patients with ailments they don't have and don't get treated for. And then the government sends them thousands of dollars a year for an appointment that costs them $50 for the customer and then whatever they had to pay for the nurse practitioner. I feel like the stock should be even lower. It's worth $250 billion market cap right now, and their business model is bilking the government out of funds that their patients don't even have ailments for. They'll be out with their numbers this week, so look for a little volatility there. And, listen, doesn't mean they can't get through it, all right? These articles were out there in July and August of last year. You'd say it's the cost of doing business, but boy, I hope they bring it down on this one because I read that one over and over and I can't understand it. Yeah. And, yeah. I wouldn't let them. That's exactly, folks, go get your annual physical, get your annual blood work done, okay? That's an important one. But you don't need people coming in and picking you apart when you're doing that. You're staying on top of things, especially when they're diagnosing you with stuff you might not even have. It makes no sense whatsoever. Okay, let's take a look at some other equities. Let's take a look at Amazon. Amazon's trading higher by about 0.6% right now. All right, that's your daily. Quite a resurgence from the lows of April. We're coming into the highs. And at those highs on earnings 6 months ago, you traded lower. And you did it on 244 million shares. Last week, you traded higher on 206 million shares. We're going to need some more volume, but guess what? Earnings week can do it. Earnings week can do it. So we'll see. They're out with their numbers Thursday. You get Apple out with their numbers Thursday as well. Apple's been struggling, man. Excuse me. Decent volume last week. You do 273 million. Yeah, that was the week of July 4th, but I believe that's the week when they told everybody that they were abandoning their own AI quests. Yeah, this area right here. So you're struggling to get above this area, and you should be, to the tune where you added, almost 10% to this equity share price over 4 trading days, folks, on the optimism that they were ditching the amount of money they were spending to try and solve Siri AI, and they're going to go with somebody else. Now, what are you doing? You're bumping up. We got a high of 214.65. 214.65. Very low volume on that day. And then you got your pullback from the recent highs of 216.23. And Apple's struggling to get over that area. It's going to have to prove to the market that it warrants that, 8% pop you got from $200 to $215. Microsoft. I think you're on an A to B to C to D to 600, man. Sounds wild. $90 higher, but put this even on a monthly. All right, well, that's not too encouraging. A little drop off on the monthly. April's going to be an extraordinary month on many charts, folks. To match that volume is going to be a tall order. But since then, you've had the drop off. Now you got highs out here. In August, what was the high? Let's get it. July of last year, you did about 440 and then 450. And we haven't done that kind of volume since May. All right, so Microsoft's going to need a little more volume here. Take a look at the weekly. Well, Friday was a nice day, though. That was last week, excuse me. Yeah, that was a nice week. Look at that. 100 million shares coming in. Pushing all-time highs to 518. We're at 511.62. S&P's off by 7. NASDAQ 100 off, up by 47. Tech stocks in the green. One more segment. Don't go away, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We take a look at JP Morgan. Yeah, last week we pushed the high at 299.59. We take a look at the daily right now, and you're trading down by 0.2 at 279.99, just off the highs at 299.99. Yeah. And so JP Morgan, they're out there. And for some context, and this is what it does drive me crazy, man. All right? You got Jamie Dimon out there saying that life is unfair for JP Morgan, essentially, okay? And this is talking about the open banking rules, and this is talking about them starting to charge the middlemen, like Plaid, how do you pronounce that one? I better figure it out, because they're going to be talked about, man. Whether it's them and MX Connect, or MX is the other one, okay? And what he's talking about here, and this is where it goes. So you had Democrats and Biden, okay, passing, where is it? Open banking. Come on, granting access. Nope, it's up top. Yeah, here we go. The rule, okay, is the open banking rule. It was finalized by the Consumer Financial Protection Bureau in the waning months of Biden's administration, mandated that banks had to provide data to authorized parties for free. A week after that, Jamie Dimon called on bankers to fight back against unfair regulations. Now, the tough part about this is that, you know, in the same vein as allowing crypto to flourish, you should want this, folks. Okay, you want people having access to certain parts of it, and the whole part of this that's amazing is that he's talking about that they get 1.89 billion data requests in June. Folks, that is nothing. Okay, in an automated system for the bank the size of JP Morgan is, dealing with 1 billion to 2 billion data requests for their systems over the period of a whole month. Well, does the stock price look worried about June and July? Yeah, it's always going to be loosen those regulations. We'll see. S&P's down by 4, NASDAQ up by 68. I'm coming back for the top of the hour update. We'll see you tomorrow morning at 9 o'clock, folks. Have a great night.